I want to talk a little bit today about emergency savings and how it works and what's the best thing that you can do with your emergency savings. Now, first of all, let me just stress that you need to have an emergency savings fund. It's probably not something I have to convince you of, but if you don't, if you're in debt, get out of debt first, but after that, the first thing you should do is build up an emergency savings plan and have that emergency savings fund somewhere. Now, I'm here to talk about where are the different places that you could put your emergency savings. Well, most of the people I talk to will have an emergency savings, let's just say $25,000 to make it easy, of money that they put into a bank account, and they're going to keep that emergency savings until they need it. And then what are they going to do? As soon as, let's say you run into an emergency and you need that money, they're going to take that money, they're going to take it out, they're going to purchase what they need, and then they're going to go ahead and replenish that money once again into their emergency savings fund. What's the problem with this? Well, it's not the cycle. That cycle needs to happen. The problem is, where is the money? In a bank account right now, you're going to earn, let's say, 1%. And that 1% is also going to be taxed, but I won't get into that. So if we're earning 1% in a bank account through our entire life, what's the problem with that? The problem is, what could we be earning on that money? It's called opportunity cost. The future value or the loss of future value of our money by putting it somewhere. Now, most people say to me, well, where else would I put my money? I need it to be safe. I need to make sure it's there and it needs to be accessible. That's where I'm always going to argue. Whole life insurance is the best savings vehicle out there. So with whole life insurance, what's the difference? Does the cycle change? Nope. If you need money, you can take it out, you can use it, and put it back in. Okay? So it doesn't change our cycle. We still have accessibility. We still have all these different traits. But the difference is whole life insurance has a lot of benefits we're not going to find anywhere else. You can watch my video on whole life insurance if you want a real in-depth discussion of all these different benefits. But whole life insurance is going to buy us a death benefit. The money's going to be accessible. It's going to grow tax-free, and it's going to have some great tax advantages, as well as the fact that it's going to have better growth by leaps and bounds in a bank account. Right now, whole life insurance policies are earning about 5%. So the cycle doesn't change. We need the emergency savings. We need it to be somewhere where it's accessible and where we can get the money exactly and when we need it. Whole life insurance just offers us a place where now, over the long view of our lifetime, we're going to have a lot more growth than we would in a bank account. And that can add up to hundreds of thousands of dollars of difference. And if you don't believe me, you can do the numbers or email me and I'll show you the numbers of money when you retire just by putting your emergency savings fund in a different place. Thanks.